Today, the election, your money, and our next guest says, don't trade the market. There are three big tailwinds that will boost your portfolio. Kristen Bitterly is the head of capital markets at Citi Private Bank. Welcome back. It's good to see you.
Good to see you, too.
Does the election matter to the markets? You know, the gang that I have in front of me today says it doesn't matter all that much.
Of course, the elections matter in terms of what's on people's mind and some of the short-term volatility. But what we're encouraging our investors to do is really take a step back and think about what is true regardless of the outcome of the election. And as you just mentioned, we really think there's a trifecta. There's three things that we're going to have certainty on going into next year. So the first thing is we're going to have a conclusion of the election, right? People have been talking about it. They've been rotating their portfolios, but we're going to know who's president and we're going to know the composition of the Senate. So we will have a conclusion of this election season. The second thing, which is really important, is we're going to have fiscal stimulus. Now, the exact composition of that fiscal stimulus could change depending upon the outcome of the election, but we're confident that we're going to get it. And then the last part is really focusing on what's driving markets overall. It's COVID. And all of the data is telling us that 2021, we will have a vaccine. There are several companies that are in late stage phase 3 trials right now. And that really is going to serve as the tailwinds in terms of supporting the market in 2021. No,
you left out the elephant in the room. Number 4, the Fed, right? I mean, the Fed underpins everything that you said.
That's very important. And we expect the Fed to kind of continue course. And we'll hear more later this week, obviously. But in terms of supporting the economy, supporting the recovery, supporting everything, given this exogenous shock that has been COVID, we don't expect a change in strategy from the Fed.
So does this mean then that if I think, okay, we're going to get clarity on the election, we're going to get it. It's just a matter of when we're going to get it. Fiscal stimulus, I got the Fed at my back. I've got a vaccine coming. I want to go cyclicals, reopen stocks, these epicenter stocks that Tom Lee's been talking about for so long.
Absolutely. So I think what we're looking at from a portfolio standpoint is look at the rally that we've seen since the beginning of the pandemic. That's been dominated by what we call COVID defensive names. So we basically broke the equity market into COVID defensives and COVID cyclicals. Very intuitive, right? It's like the COVID winners, the COVID losers. And so what we've been encouraging our investors to do is take some of the gains off the table in those COVID defensives to start positioning your portfolio for these events, when we get the fiscal stimulus, when we get a vaccine. And that actually gives rise to opportunities in financials, in industrials, actually in real estate as well.
Are you looking for a big move higher in rates?
We're looking, look, on the back of the election and getting certainty, could we see some curve steepening? Absolutely. Do we think short-term rates are anchored? Yes. So that curve steepening could help financials. But I think more importantly, on the financials front, so financials haven't gone anywhere in the past 12 years. From a price to book ratio, just looking at where they're trading, it's at 0.9. This is basically the lowest level that we've seen since the end of the global financial crisis. And so when we're looking at the fiscal stimulus, we're looking at expecting and being able to see, the market can see that post-COVID world. Once a vaccine is announced, then you're going to see a nice tailwind for financials.